Create a YouTube 16:9 video using this script. Okay, so here's the table of contents. 1. What is SCHF? A simple introduction. 2. The income side. How SCHF pays dividends. 3. Behind the price company earnings and their impact. 4. The quiet power of low fees. 5. A look inside top holdings and global reach. 6. Performance, perspective, and important risks. 7. Who is SCHF built for? 8. A plain summary for the long-term investor, written by Morgan Housel. The psychology of money. Section 1. What is SCHF? A simple introduction. The Schwab International Equity ETF. Ticker SCHF. A straightforward investment fund. Its purpose is simple. It gives you ownership in a broad collection of companies outside the United States. Large companies, medium-sized companies. Think of it as a single purchase that spreads your money across developed markets. Europe, Asia, other parts of the world. It tracks an index. The FTSE Developed ex-US Index. It doesn't try to pick winners. It simply owns the market as it is. A reflection of international stocks as a group. This fund is a tool for diversification. Many investors keep most money in their home country. That feels comfortable and familiar. But the global economy is vast. Great companies exist everywhere. SCHF lets you participate in growth and profits in countries like Japan, United Kingdom, France, Switzerland. You don't know which country will outperform next year, so you own a little of many. The goal is balance, not chasing excitement. A long-term, globally aware portfolio. SCHF is passively managed. No team of analysts picking winners. The fund follows index rules. It covers thousands of companies across dozens of countries. This reduces the risk of any single company's failure. Section 2. The income side. How SCHF pays dividends. Many of the established, large companies held within SCHF are profitable businesses. One way they reward their shareholders is by paying dividends. A dividend is simply a portion of a company's profits that it decides to return to the people who own its stock. Since SCHF owns shares in these companies, it collects these dividend payments on your behalf. The fund then bundles these small payments from hundreds of companies together and distributes them to you on a regular schedule, typically quarterly. This creates a potential income stream from your investment. The dividend yield of SCHF is not a fixed number. It changes. Section 3. Behind the price company. Earnings and their impact. The price of SCHF on any given day is a reflection of the collective value of all the companies it holds. That value is heavily influenced by one thing: earnings. A company's earnings are its profits. When the businesses inside SCHF report strong and growing profits, investors become more optimistic. This optimism often leads them to pay more for that company's stock, pushing its price up. As individual stock prices rise, the value of the entire ETF and a single SCHF share increases. Section 4. The quiet power of low fees. Every fund charges a fee for its services. SCHF is known for having a very low expense ratio. As of today, 2025 September 23rd, its fee is just 0.06%. For every $10,000 you have invested, the annual cost is just $6. The money you don't pay in fees is money that stays invested, working for you. Section 5. A look inside. Top holdings and global reach. When you own a share of SCHF, you own a small piece of many recognizable non-US companies. The fund's top holdings are corporate giants from developed nations. Nestle, ASML, Toyota. The fund is market cap weighted. Biggest companies equal sign biggest positions. Diversification isn't just company names. It's geography. Japan, often the largest allocation. United Kingdom, France, Germany. It prevents dependence on any single nation's economy. SCHF also diversifies across sectors. Financial sector, industrial companies, consumer-focused businesses, healthcare firms. That sector diversification adds risk management, a vote of confidence in the global economy as a whole. Section 6. Performance, perspective, and important risks. Looking at past performance can be useful, but it requires the right perspective. Over recent years, SCHF's returns have moved with the rhythm of the global economy. There have been years of double-digit gains, fueled by strong corporate earnings and investor optimism. There have also been years of flat or negative returns, recessions, geopolitical events. One of the most important factors influencing the returns for a U.S. investor is currency risk. SCHF holds stocks priced in euros, SCHF holds stocks priced in Japanese yen. However, the fund itself is priced in US dollars. This currency fluctuation adds a layer of volatility separate from company performance. It is critical to remember, past performance is not a guarantee of future results. Market conditions change. What performance history does offer is a realistic sense of the fund's volatility. It shows the kinds of drawdowns you should be prepared to endure. Market risk. The entire stock market can fall, and SCHF will fall with it. The fund is designed for those willing to accept these risks in exchange for long-term global exposure. SCHF provides broad international equity exposure through a low-cost, passively managed ETF. It offers geographic and sector diversification with minimal fees. While subject to market and currency risks, it serves long-term investors seeking global exposure. This analysis is for educational purposes. Consult financial professionals before investing.